Remember our very first question? When do we actually book profit on a multi-year contract? Today, we finally answer it, with the percentage of completion method. The idea is simple. Instead of waiting till the end, we track how much work is done and recognize revenue in proportion to that progress, matched with the costs incurred. This method is consistent with the accrual concept and the matching concept, two of the most fundamental principles in accounting. But here's the catch. AS7 says this method should not be used unless we can make a reasonable estimate of the final outcome of the contract. For fixed-price contracts, 4 conditions must be met. 1. Revenue can be measured reliably. 2. Economic benefits will probably flow in. 3. Costs and stage of completion can be measured reliably. 4. Actual costs can be clearly identified and verified. For cost-plus contracts, the outcome is reliable when 2 conditions are met. 1. It's probable that economic benefits will flow to the enterprise. For cost-plus contracts, the contract costs, whether or not specifically reimbursable, can be clearly identified and measured reliably to the enterprise. But what if the outcome cannot be estimated reliably? Then revenue is recognized only to the extent of costs incurred that are likely to be recovered. And contract costs are recognized as an expense in the same period they're incurred. This is often called the zero-profit approach. Let's solve a full example. X Ltd commenced as a construction contract with a fixed price of 2 lakh rupees. In the first year, the company incurred 81,000 rupees, completing 45% of the work. The company received 79,000 rupees as a progress payment from the customer.
In the second year, the company spent 89,000 rupees to finish the remaining work. In the second year, what should the profit and loss account extract look like, and what about the customer's account for both years? Let's solve this calmly step by step. In year 1, 45% of the work was done, so revenue is 45% of 2 lakh rupees, that's 90,000.
Now we find the profit. Revenue of 90,000 minus the cost incurred of 81,000, that leaves us a profit of 9,000 rupees. In the customer's account, we received 99,000 rupees by bank. The remaining 11,000 rupees is carried forward as balance due. In the customer's account, we received 75% of the work was completed. So, revenue equals 55% of the total contract price. So today we learned the percentage of completion method, the heart of AS7. If this helped, like this video, subscribe, and share it with your friends. Next time, we'll learn how to measure stage of completion and what happens when a contract starts making a loss. See you there!